This ledger records the daily accounting of an empire. In 1621, the drive to secure the figures on pages like these led to the extermination of 15,000 people in the Banda Islands. To protect a 40% dividend payout, the company replaced an entire population with a production system designed for a single commodity, nutmeg. The organization behind this campaign was the Verenigde Oost-Indische Company, or the VOC. While other merchants operated simple trading fleets, the Dutch government designed the VOC as a military commercial complex built to seize markets by force. The Dutch state granted the VOC directors authority that rivaled sovereign nations. They held the legal right to sign treaties, build fortresses, execute convicts, and, as this copper coin demonstrates, strike their own corporate currency. The VOC functioned as a state within a state. It became the world's first true transnational megacorporation, powered by a self-sustaining accounting mechanism. That mechanism relied on a 1602 financial innovation, permanent capital. Unlike previous ventures that returned cash to investors after every voyage, the VOC locked in roughly 6.4 million guilders indefinitely. This provided the long-term stability needed to build massive shipyards and colonial infrastructure. Because this capital was locked away, investors who wanted to exit had to sell their interests to other buyers. This requirement for liquidity forced the creation of the world's first secondary market, the Amsterdam Stock Exchange. Permanent capital created a new pressure for the company's directors. With investors constantly trading shares based on future expectations, the boardroom was forced to prioritize continuous growth to prevent the stock price from collapsing. By 1609, this pressure triggered a confrontation with Isaac Le Maire, one of the company's largest shareholders. Le Maire grew frustrated with the Heren 17, the board of directors, accusing them of rampant corruption and refusing to open the corporate books for a financial audit. When the board sidelined him, Le Maire launched the first recorded bear raid. He formed a secret company to engage in naked short selling VOC shares he didn't own to drive the price down, hoping to buy them back later at a steep discount. The raid damaged the stock, but it didn't change the board's behavior. In 1622, a larger group of dissenting participants revolted, using public pamphlets to accuse the directors of insider trading and self-enrichment, while the company's transparency remained non-existent. By this point, the financial reality was grim. Share prices had dropped significantly, and the company had not paid a dividend in 2 years. The directors were presiding over a stagnant enterprise and a furious investor base. To fix the stock price and resume dividend payments, the board turned toward a strategy of aggressive acquisition. They needed a total monopoly on the world's most valuable spices, and they were willing to use any level of violence to secure it. The target was the Banda Islands, the world's only source of nutmeg and mace. In the 17th century, these spices were high-value commodities that promised massive returns if the VOC could control the entire global supply. The VOC used treaty tactics to corner the market, forcing the Bandanese into exclusive trade agreements that prohibited them from selling to English or Asian competitors. When these terms were ignored, the board dispatched Governor-General Jan Pieter Zoon Koen. His instructions were to enforce the monopoly through military force rather than negotiation. In 1621, Koen invaded the islands. To break local resistance, he utilized Japanese mercenaries to publicly execute and dismember 44 Bandanese leaders. The campaign resulted in the death or enslavement of over 90% of the 15,000 inhabitants. Those who weren't killed in the initial assault were driven into the mountains to starve. With the indigenous population removed, the VOC repopulated the islands with Dutch planters and enslaved workers. The archipelago became a dedicated corporate production zone. The Banda Massacre functioned as a calculated corporate acquisition. Cohen replaced a civilization with a plantation system, ensuring the VOC could stabilize its stock price and continue delivering 40% dividends to its shareholders. By the 18th century, the VOC fell into a fatal cycle known as the dividend trap. This chart compares the company's actual earnings against the dividends it paid to shareholders. To keep the stock price artificially high on the Amsterdam Exchange, the directors consistently paid out dividends that exceeded the company's actual profits. To fund these payments, the VOC liquidated its assets in Asia and took on massive short-term loans. This 1623 bond represents the beginning of a debt accumulation that would eventually reach hundreds of millions of guilders. The financial mechanisms designed to fund expansion were now eroding the company's foundations. By prioritizing immediate shareholder payouts over cash reserves, the directors left the VOC unable to survive a major economic shock. That shock arrived with the Fourth Anglo-Dutch War, which severed the company's trade routes. By 1799, the bankrupt VOC was dissolved, and the Dutch state was forced to take over its territories and a debt of 219 million guilders. The VOC established the primary structures of modern corporate finance, from joint stock ownership to the secondary market. Its history illustrates the specific risks of this model, an institution that optimizes for shareholder value at the expense of its own long-term stability and the lives of those it governs.